on, guys? It's Garrison Smith, one of the pro traders in the Jake the Stock Guy trading group. Make sure y'all sign up if you want more of these educational videos. Catch our watch list every single morning, and let's grow your account. Let's all get rich together. It's our main goal. I'm gonna do a video on debit spreads and credit spreads today. All right. So first off, you have to have a margin account. You can only do spreads on margin, no cash accounts. So either you can have a margin account below 25K and do this, but most of y'all don't do that because you can't have more than 3 trades a day. So I suggest when you do this, you have more than 25K so you can trade unlimited and also do spreads. One of the biggest factors for traders is time decay, and I'm going to show you how to completely eliminate time decay in your trading. Spreads can allow you to make money basically if a stock is going sideways and not allowing market makers to completely burn your contract through theta. It's impossible in spreads for your contracts to decay, pretty much. So debit spreads, we're gonna start off with debit spreads. This is basically, we're going to do debit spread and we're going to do a call spread, all right? If you look in the bottom right, it's bullish, it's limited profit, limited loss, as you can see there. So basically, you're going to buy a call as strike A, as it says, and sell a call as strike B. Strike A will be lower than the strike of strike B. To make money in a call debit spread, you need the stock to finish above the price of the strike you sold. So for example, you're going to buy the 1090 call, all right? So Tesla's price is 1087 right now. You're going to buy a 1090 call and you're going to sell a 1095 call. So your max profit and your max loss, as it says here, is 270 and 230. How they get this is you're going to take the price of the 1090 call to buy, which is in between $2010 and $2,085. And you're going to subtract that from the 1095 call when you sell. Because when you sell a contract, you're basically gaining this premium. They're handing you cash for selling it. And the difference between this is 270 or 230. That's your max loss. So we're going to need Tesla to finish above 1095 on expiration to make the full premium, which is 270, as you see here. You need to finish above. You have a limited max profit, a limited max loss. It's so much better, especially for new traders with a big account. You can't lose the full price of a contract. Especially like Tesla, you can lose hundreds in seconds, minutes. You can only lose the difference between you bought and you sold, because that's all you're paying your broker. You're not sending your broker $2,000 to buy a call. You're going to sell one, you're going to buy one, and all the broker gets is this, $230. That's all you can lose. That's all you can lose. And it lets you have the ability to make a profit of $270 with only losing $230 risk. It's a pretty good risk-reward ratio, if you ask me. It's better than losing more than $230 in a couple minutes if the stock goes, if it doesn't go your way. And again, debit spreads are a bullish position, and you move into credit spreads, and this is a bearish position. You're going to basically flip it. You're going to flip it. You're going to sell a lower leg and buy the higher leg. So you need the stock to finish below the leg you sold to make your max profit. Spreads are more of a passive income, taking it nice and slow and not risking too much. However, you should know which one to jump into. It's still risky. You need to know if the stock is more bullish on the daily or is bearish on the daily. You need to make sure your stock is going to be finished below your strike or above your strike, or else you're going to lose your max profit. But still, you can still buy like maybe 2 weeks out expiration, and you can still make money if it goes sideways. You can still make money. It's not like when you use a spread, it has to be below that strike for you to even be in profit. You're going to make profit if it moves in the direction either way. But to make the max profit, it has to be below the strike you sold or bought. Also, the more volatility in the option chain is the most you can make in spreads. For example, Tesla. It's one of the most absurd stocks. It can move $60, $70 in one day. One day. That's all it is. And this is great for new traders, especially because if you want to trade Tesla, Tesla is one of the most risky stocks, especially for smaller accounts. You can even do spreads on smaller accounts as long as you are on margin. So credit spreads, for example, we are going to sell the lower leg and we are going to buy the higher leg. To make money on a credit spread, a call credit spread, you need Tesla to finish below 1090 on your expiration date. It's more bearish right now. I don't know what the market's going to do tomorrow on January 6th. I couldn't tell you. But you need to know if it's bullish or bearish before you get into these. But again, it limits your loss and it limits your profit. It is way more safe than buying a straight out call or put. Spreads, call spread, credit spread. See, as you can see here, it's all red until you get below your strike. You sold the 1090, you need to finish below 1090. It could finish at 1090 exactly, and you were still going to make $200. $200. And the max you can lose is $270. Spreads are great for managing risk. It really is, especially if you're a new trader. Just know if the stock is bullish or bearish by simple technical analysis, what Jake or any of the other pro traders tell you. That's simple. It's simple. That's all you need. You can even buy more to maximize your profit. You can sell two, you can buy two, and now your max profit is $460 and your max loss is $540. Yeah, the profit's smaller, but instead of spending $4,000 and risking $4,000 in a trade, your max loss is $500. $500. These are why it's great. I'm glad I could explain this, guys, for you today. Let me know. DM me if you have any more questions on this. But it's a great way to manage risk. And again, only can do this on a margin account, options level 3. Thank you, guys.